Hey everybody, Mike Fairborn here for Markets and Sectors. Welcome back. Long time no see for many of you, but hey, just doing a back-to-back here with James's class initially. Now we're into Markets and Sectors, and looking forward to our discussion here today. A few things to look at. We did get one of the spikes that came up on our weekly chart. I want to take a look at that today in terms of a possible indication on the market. We also want to look at some of the longer-term MACD signs that are out there too. When I say longer term, I'm talking the weekly, the monthly charts. Those don't happen too often, but I did want to give us a reference point on that. We can also look at specific sectors or stocks as it relates to those as well. So look forward to going through that with you all as we look at generally, a seasonally flat month. So we'll see how that pans out as well. We'll tap into that. But hello to you, Stanley. We had a Rusty Stanley, wrong. Beth J. Richardson, Scott, David, Andrew, Lola, Will, Sharon, BJ Riceberg. Great to have you all on board here, as well as Kevin. We do have Cameron May in the chat again. He's doing the back-to-back chat with me. I appreciate Cam being here to help out with us on that front as well. So let's dive into it. Let's get started here with some disclosures so we can take a look at what some of the data has shown us this week. So information here is provided for general information purposes only. The paper money software application is for educational purposes only. Investing does involve risk, including for some products more than your initial investment. Now, there is a list here of a couple of disclosures on futures and futures options. A few of these you can see, and it does state that futures and futures options trading does involve substantial risk. Is not suitable for all investors. Now, we don't trade futures in this class, but we do look at the charts. We're going to want to look at some of those charts again today. Some of those broad-based commodities can be very interesting, or there might be some that could be interesting to look at today. They can be very interesting, as we've discussed, because they can relate to other stocks that are tied to those. That was my point there. Okay, past performance is no guarantee of future results. And with that, let's get sharing. Let's get going here and seeing what we've got in the general markets here. I just pulled up just some of our original markets. I wanted to kind of start off with these initially today, just to kind of highlight some of the details where we are right now. With the S&P and a few of our core indicators that we'll look at from market breadth and other indications. But you can see up top here, okay, so 6,200, we haven't quite come back down to this level, or we did see a couple of key touch points longer term on the S&P. It's always interesting, too, when we tap into those fibs. I forget which coach it is that uses the fibs so much. I'll use them from time to time for sure, especially in some of the futures classes. But like, say, for example, over here, if we're using the fibs, and if there was ever an anticipation of a consolidation like we oftentimes will get in the month of August, where do some of those numbers lie in at? And where might they also be kind of bolstered, with prior horizontal support and resistance levels? That's also referred to as anchoring, or where might they be anchored at? I'm really not seeing a ton here, except for that was a prior high that hit right off that level. That was very close to, well, there's your gap right there, and then it's sort of a test at that gap. 50% is all the way down here. We don't know if we're going to get a pullback to any of these levels, but they are interesting to put on the chart when you start to see some signs or some indications of a bit of a pullback. And we'll see. Maybe we can reestablish above this level. We'll look at seasonality here in just a second as well. All right. I'm going to do one other thing too, just on this chart before we go forward. Let's clear off a few of these and just highlight this. Sometimes you can look at drawing the fibs off the tops and the bottoms, or off of the body of the candle as well, which I'm going to do right here. I'm just going to see what that looks like. Oftentimes it can be very, very close. In this case, it's a little bit different. You can see up top here that these prior highs kind of come much, much closer to the 23.6 initial fib that we're seeing here. And also the 38.2 kind of ties in very closely to some of these support levels here as well. So just long term, wanted to put that on your radar. We'll be looking at this on a week-to-week basis anyways as we go through. But there it is for the S&P 500. Now, breaking this down initially first, we'll just go through some of our criteria here. You did see that we did get below the minus 100 McClellan, and we got up above the minus 70. We're going to confirm that right now. Well, you can see right now we're at minus 58, so we did. So what's interesting is McClellan, and we've seen this happen time and time again when we've taken a look at it in this class. When you get below that minus 100 and get back up above the minus 70, McClellan indicator, at least one of the ways that Tom McClellan himself has set it up, is that 2 to 3 weeks of a rally. Now, it doesn't have to be a strong rally. It could be sometimes a sideways, very, very mild rally, is what the indicator tries to foretell. Now, anything can obviously happen, but we've looked at a few different scenarios where we've seen it bounce up and been up over that time frame. What does make me wonder is, what does the McClellan oscillator do when you get into a seasonally kind of on average sideways range? Let's go ahead and just kind of scoot into initially just to look at some of the seasonality charts in here. That is a 10-year. There's August to August. You can see that it's not really trending a ton. It might be up slightly, but it'll be very interesting to see how that McClellan oscillator operates. Does it still fulfill if we were able to kind of run up towards the end of August? I mean, that's a very, very more of a sideways trend line as opposed to an upward move. Now, of course, anything can happen in a year, as we've discussed, but if we take a look at a 5, 10, 20, it's very, very similar to this, not to mention the September timeframe as a pullback month as well. So interesting to see that McClellan spike right now above that minus 70, and what might we see going forward here? Okay, well, here are some key notes as well. A little bit of a dip in the oscillator. Okay, that could suggest maybe a little bit longer term, a longer term or extended sort of a consolidation pattern. But are we really going to see some of the breakdowns of the Fibonacci levels? I'm just kind of eyeballing it, but maybe the 23.6 was close to this level. The 38.2 was close to this level. Will we see those levels? Well, one of the indications that we'll see frequently in this class right over here is the advanced decline line on the NYSE. So a bigger basket, about 2,700 plus stocks in the NYSE over here. And what you're going to see is maybe a breakdown below these levels, which we have not seen yet. But if you can see it break down, and maybe if it breaks down before prices begin to break support, well, that can be a clue in a lot of cases that you might see a bigger pullback. But right now, it's kind of steady as she goes, right? Look at that. I mean, it's just been holding up very, very nicely. Advancers keeping up with those decliners, and we've got that right there. So let's just pull back down. We'll pull this back down and we'll go forward. But that is maybe, and it has been in some cases, it can be a leading indicator. Does it break down first? Does it make a new low here, whereas prices haven't made a new low? Will we see September kind of come back and get hit, There you go. So let's go over here. Let's go into one more. I'm going to highlight this and look at SPX EW equal weight. So as we take a look at this one, just kind of another read on the SPX. So everything equal weighted, nothing really market weighted over here. You can see this right through here. Look at this sideways channel. Boom, right there. What have we been doing? We're kind of holding up here, which is interesting. In other words, the equal weight might find some support through here. Question mark. We don't know. Maybe some of the smaller companies could start to find some of the underperforming companies, or maybe some of the value components within the S&P might start to kick in gear. Here's a great look at that growth and value map that we've got over here. Just wanted to highlight this and show you that value has been down, underperforming this year, clearly. And you have to say, well, we kind of really since May, value has underperformed growth pretty clearly. Look at that. And it's the discrepancy is really quite large right now. How much what the S&P within this is what they do. So they put, certain categories of companies that they consider growth and certain categories of value. $ SP 500 PG growth, PV would be value. But look at the difference. We're in the 1% range, almost 2, but 1.9 relative to very, very close to 13. 12.93 range. So that's been the difference, right? Growth. Will we see that SPX EW? Because a lot of times these will come back and they'll kind of ebb and flow, and they might come, and sometimes the one will come back and the other, almost like sometimes how stocks will do different types of stocks. But we'll see if that does happen. If that happens, well, we might be able to see that growth, those value companies start to bounce up a little bit, and then what we could see are prices maybe coming through here and bouncing. I don't know if this will set up kind of like a swing trade pattern or not. We got a little bit of one of these last time, which was interesting. We got a little bit of a flag pattern just coming right down through here. And as you guys recall, we looked at it. It was sort of kind of inverted head and shoulders pattern, kind of, right? But there was kind of a nice follow through right there as well. All right. Well, that is that. Let's go ahead and move on forward and see what else we can get out of breadth indications. Well, before we hit breadth, we do need to look at the Hindenburg-Omen spike. We did get a spike. You want to be mindful of this because there's a sufficient number of companies that are hitting 52-week new lows. We haven't had one of these spikes in a while. 52-week new lows and 52-week new highs. So what is that? Those are just annual highs and annuals. In other words, there's a 52-week new low and a 52-week new high. And if you get sort of that discrepancy, it can create a chasm in the market that could create a spillover effect in terms of a pullback. Now, we did flip over into a weekly chart. It's weekly. And you can see up top here, what we're really looking for are a series of almond spikes. You notice a lot of times at the top, you might get those. And I think they can help to push prices lower. It could stand to reason that that would be the case. We had a few up here, a few up here. One of the really main points that traders might look for using the Hindenburg-Omen is this right here. The spike back up here, this was a lower high, and we're a ways away from that if it were to play out anything similar. In other words, if it were to consolidate for a while and then make a lower high, folks, we might have, weeks and weeks to go to see that. But do you see these spikes occurring right there over that time frame? Massive level of spikes right there, and that can help to foretell, at least the way that traders will use this, is a continuation of that downward trend. And that extension right there, 2022 was a rough year. And the Hindenburg-Omen called it out very, very nicely. The chasms with just a huge number of 52-week new lows and a fair number of highs. And finally, it broke the market. So we'll keep tabs on this each and every week to see what happened. Exactly. It was a last week spike on that downward move. Exactly, Riceberg. Yep. That's the one. You got it right there. It was big enough. Remember, we're not looking at the price action or anything. When you're getting 52-week new lows, it could add to it. But we're just saying that, there's a lot going on behind the scenes, and it has to do with the actual companies out there, too. So let's do this. I'm going to scoot on over into this to give us some more insight on that breadth indicator. All right. And so here are 52-week new highs. And what did you see over here? Well, we saw a bit of a dip, even as markets made new high. Now, what some traders might say is this can kind of give credence to the seasonality theme of a sideways August and maybe even a downward September. Question mark. But some would say that because look at what's happened in terms of NYSE, got the NYSE 52-week new highs over here. What are you saying? Let's highlight this. I know we're looking at the NYA, so we are looking at the New York Stock Exchange as our comparison line. Did you see what we got over here? Folks, that's a new high. Rice has made a new high, but 52-week new high, 50 new highs didn't make a new high. So think about that. It didn't. So we've got a smaller number. These are the numbers of companies that, let's say, hit it as we broke out higher here. We got above 150. Let's say about, I'll just eyeball it, 175 companies that were hitting new highs at that point in time. That's a low number relative to 2.7K. Okay, previously, what we were doing is we were really over here into this range. When we were trending higher, we were consistently having at least 250 new highs. We were breaking that level for sure. And notice it seemed to be like we kept, although it wasn't perfect, sideways, we looked to keep trending higher in a lot of ways. I mean, this is a higher move as prices got higher. There were more 52-week new highs. That's 450 new highs. So we just didn't see that spike, which tells us that we had a fewer number of highs here and maybe a larger number of lows taking place. I think if we do this over here, I'm trying to remember the symbol. It's is it just L at the end? It might be. It's GL. No. If anybody has it, let me know and I can plug it in. Oh, there we. Yeah, let's see. Highs. LGL. 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 Now, there it is. Lows, annually lows, 1 year. It's just low is what it is. NY, $NYLOW. Let's just pull that up and just see, comparatively speaking. Ooh, that one got a huge number. We didn't have a ton, but notice the spike over here. You want to know where the Hindenburg Omen came in? That's it right there. We had 100. And remember, we had 175 that kind of cleared. We were just sort of eyeballing it over that time frame. So we did have a decent sized spike, and that was over last week, right? As we dipped right there. So there you go. That's breaking down that Hindenburg Omen, so you can see it right there. So we could see more indications behind the scenes here, clearly, just by watching the NYSE highs and lows on an annual basis with these lines over here. Could give us some indications as well. But it is nice to have, I must say, just to have that Hindenburg Omen there as a reference on a weekly chart for us to check out. Again, there's the seasonality, kind of a look at the sideways range, a pullback, and traditionally, a year-end type of rally that begins maybe in October low on average. I'm going to turn this into a 20 just to see what it looks like on a 20-year. You can see that it's somewhat still similar. Really kind of a lot of sideways action until you get to, let's say, mid-September before you see the dip, then a rally. But again, this line on average is what it does, but it's made up of 20 different lines. And some of these lines are going up higher and some of them are definitely going down lower too. But on average, that's what you get. And it's funny because a lot of the lines as you look at them will kind of mirror the average. This one was different for sure over here because that was tariffs that were hitting that. Unusual tariffs, right? Just a little bit unordinary in terms of the scale of the tariffs, worldwide tariffs, you'd have to say, to build back that level playing field, which I don't think we've had that since like the 30s or something. It's a crazy number. 1930s, that is. But there you go. This is, by the way, we'd love to look at this one towards the end, the S&P 500. Take a look at this guy. This is just kind of bouncing up a little bit. These are very interesting too. You can see early indications of what we might get on a pullback. And sometimes, over here, you can look at these shorter term sort of, maybe flag patterns in line with the trend. A lot of times these trends, these flag patterns will show up even on, shorter term scales, right? Flag, maybe a sideways flag, whatever the case might be. But then you can also detect pretty quickly when the trend itself begins to make lower lows and lower highs. You just get to see it a lot easier than right over here. And so we're using a 30-day, 30-minute here. Let's shoot over to the daily to show you the difference. What a difference, right? All you see is just basically blocks, right, with the daily candle relative to a lot more data coming through on those 30-minute charts can be helpful. Yes, Riceberg. Yeah, that was the high. That was the high NY $, NY HGH, and then the low is $NY low, LOW. Yeah. Yep, we shall see. It all just kind of depends, doesn't it? On because things are different every year. Clearly, tariffs. I mean, there's still that component in the market. So, although you do get similarities from 1 year to the next, there's just so many different things that are happening differently from 1 year to the next that there might be some similarities in certain areas, but it certainly is a different year, right? Just different data in general. All right, let's look at sectors, and then I want to look at some of the long-term MACD kind of scenarios that we're seeing in the market as well. So let's get into our sector grid, our 6-month, and just see how they're unfolding here. And we can tap into that and just see where some of the strength is. Now, what I want to do is cross-reference some of the strength we've been seeing here to what performed in the market. We can do that fairly easily as well. But as you can see up top here, what's really been moving and keeping a stronger type trend? Well, I think there are a few in here. Just first column first. I mean, utilities has really been lifted up nicely as of late. It's down today, just real close to about 1%. Nothing just yet. Financials, well, you have to say, it had a little bit of strength, but kind of sideways. Discretionary, sideways. Look how many sideways we have. Energy, lower lows and lower, similar lows, similar highs. These are very, very closely connected, right? Very closely connected. In terms of each other, they're very relatable. Real estate down here as well, just kind of flat. The others not so much, although I will say consumer staples was one that was flat, but even kind of went towards the lower end of its range, had a really good day. Well, close to 2% today. You can see right there at the end, but basically generally flat. Healthcare, one of the worst performers, down, but over the time frame we've been looking at, flat. Just trying to get all the flats in there. This was kind of up for a little bit, but more recently flat. So that leaves us with the rest. So industrials, higher highs, higher lows. Technology, roughly the same, similar, as well as communication services. Now, these three, you have some big companies in here that can help to weight the S&P 500. And we're seeing that right down here. So the bottom one, once we get past the 11 sectors, we got the bottom S&P down below, and you can see it looks actually so similar to technology. Now, we know what's moving this more than some of the others. We looked at the S&P 500 equal weight previously, but if we wanted to come over here and just into the watch list, or market watch, and I'm going to go over here actually into the visualize. Now you can see the S&P 500 right there. What could be moving it? Well, let's see. What are some of the bigger names? Yeah, NVIDIA, Microsoft, Apple, Broadcom, AMD, big still. You got, the two alphabets, Amazon and Meta. It kind of looks like the S&P 500, right? We have other groups behind there that are moving though. And I want to see what is moving and may still be moving. Let's say, for example, communication services higher. So let's just do a quick exercise again, just to see what's moving. Comm services higher as well as industrials. Let's go to the scan tab. And what we'll do, actually, sorry, just gotta get this scan in here. Second. Okay. And I'm gonna do, actually, sorry, folks. I'm actually just gonna save this from the last one, the last class. This was just for a previous one. Nothing out of the ordinary, just some financial numbers here, but I'm just gonna say total list. Okay, fine. Just so I have it for later. Sorry about that. This is what happens when you do back-to-back classes sometimes. Okay, so what I'm going to do now is I'm just going to go over here and we will go back into the scan tab, all of the following, and I'm just going to take these guys out and we're going to just do a simple, really, really simple scan using that 1 week percent change over here. Very, very helpful and very, very useful in spotting what's been performing within a previous one of the groups we were looking at, one of the sectors. So scan tab, stock hacker, S&P 500, find that in the public folder right here. Now we want to look specifically, we want to have that to intersect with down under industry, and we want to look at communication services first and everything within it. Let's just see what is moving there. Okay. Here's a weekly view of it. I'm going to double click on it and try to get these organized so you can see. So Meta has been a real key player. Now Meta is not in, so it's in this group, communication services, not information tech. That's going to play a role. That is a big mover. It's, it's heavily weighted, but you can see that right there. Really a performer within this group. You've also got EA in there too. TTD, Take-Two, a couple of sort of gaming type stocks, as in like video gaming. And then you've got over here TTD. But this is a good, quick way to see, hey, what's performing and what might be the strongest if the market bounces. Because oftentimes, not in every case, for sure, but oftentimes traders will look and say, they'll look for the performing stocks, even as the market's somewhat weak, what's outperforming the market, because when the market really kicks in gear, sometimes these companies even perform better. So just a quick scan of these real quick. Let's just run through a few of them. Here is Meta over here. There's Meta breaking out above prior highs. We're looking at it from a totally different spectrum, how we found it. Beat earnings as well, pretty handily. Okay. We also had in there EA. Okay, the other one was Take-Two. You can see that one's kind of breaking above a range over there. And Take-Two Interactive, the other one, and then we had TTD, the trade desk as well. So there are a few in there to kind of look at, but it's just a great way to be able to spot one of the sectors and kind of dive into it from there. Once you have it in place, remember, we're going to look at industrials. So easy to do. Go up top, intersect with industrials. We're just going to plug these guys in and go to select all of them, because that is the sector collectively. We want to see everything in the sector. And that is what we've got here. And really what we're trying to do is just organize it around strength over the past week. So what we can simply do is plug that in over here. Oh yeah, absolutely. Let me get that out. Okay, sure. Yep, let's get this going. This now, by the way, this looks like we might have exceeded our script limit, but this is a think script, and it's not guaranteed for timeliness or accuracy, but as long as the data is good, the script itself, with just the math behind it, should give us those numbers. Anyways, let's do that right now. In fact, I'm just gonna, well, let's see. I think I can just go here, customize. No, I keep hitting customize, and we'll share it, and we'll put that into the box. Lola and whoever would like that. There you go. Yes, I can share that weekly scan. Oh, the weekly scan. This is the one you're referring to. Yeah, right here. This is the column. Yeah, this scan is just simply put in place. This one's so straightforward. The scan, stock hackers, where you want to go. Scan what you want to look in, S&P 500 and industrials. Breaking it down based on a sector perspective, just to see where the strength is. And so that way, when you're looking at this, you're seeing everything in that sector that is showing strength. This AXON, aerospace and defense, is clearly in industrials. You've got some of these other key categories. Let's look at that AXON though, and we'll go from there. Okay, so let's take a look at that. AXON is one. Okay, this one too. So breaking into new high range, like we said, sometimes the companies that are showing the strength might be doing it for a good reason. There might be, obviously the markets responded well to that earnings announcement. They could have beat earnings, revenues, they could have guided higher. We don't know. Whatever the case is, the market responded to it. And that's something we can keep an eye on too, if you wanted to. I mean, just looking for strength. Because, by the way, one of the central points that we talk about in this class is that top-down analysis, seeing strength from the top down. When a sector is performing, what can happen is sometimes when another company within the sector starts to do well over earnings, you get maybe sometimes another earnings lift from another company within the same sector. So when a sector is strong and holding up, there might be sector strength that you're getting collectively that can also help to boost the individual stocks. That is one thing that institutions analysts will look for, researchers, right, fundamental researchers, they'll look for strength to continue, and it might have a spillover effect on a number of stocks within the same sector. So I'm just saying we're building on that, right, within this class. All right. So, yeah, you can get those spillover effects within other stocks within the same sector when you start to see strength here. But there you go. Okay, so there's some strength. Okay, want to do this. Let's take a look at some longer term charts. I had a discussion yesterday in one of the classes that I taught. It was on sorry about that. The class was it's within the swing trade class. It was a swing trade class, and within that class, basically what we did is we looked at some of the companies out there that were basically moving, but using the MACD as a method to help with the way some traders will use it as a timing mechanism on the flag pattern itself, because the MACD tends to be a little bit patient. It tends to wait and wait and wait. And then when it starts to really show some strength, that's when it sort of kicks in gear sometimes. So what I'll do, let me just show you this real quick because I wanted to highlight it. Because we're bringing up that again on a longer term scale. We talked about it on a shorter term scale. Right here in this class, it was writing the momentum wave, swing trading with the two-line MACD. Here is the link for the playlist where we talked about it because we want to build on the MACD here for the next few minutes. I'll just plug this in so you guys have it. But here is the actual link itself for the class. So here is that swing trade class link with the MACD specifically. So I think you might find that helpful. Oops, sorry, I'm going to plug that. Stop it. There we go. Okay, there you go. Okay, so let's do this. We're going to go MACD. We're going to see it on the daily here. I'm going to set it up just the way I did in that class. Which is the standard default here, okay? The standard MACD default, but I'm gonna just kind of bump these up so we can actually see them just a little bit better on our value line, our main value line. Maybe we'll go blue and then we could just go to a 3 here. We'll keep the average line, maybe one's fine, I guess. We can use the same color. Okay, that's fine. Some more details on how this might work, but you can see when there is that crossover in the MACD line to the downside and the widening, the convergence and divergence, what that oftentimes says is it's a little bit further away in terms of what the MACD is seeing from strength to the upside, which could lead to further indications about the possibility of some sideways action in the market broadly. Now, we just looked at AXO, and some of those might go up as the market goes sideways. Some clearly might go down, but the market collectively might be going sideways a little bit. Okay? And then with that, we're going to go into a weekly chart because this doesn't happen all too often. You know what I'm going to do? I'm just going to flip this into a weekly because I already have it painted on the screen. So how are we doing long term though? How does our long term trend look? Well, the longer term trend looks pretty good, but what we're looking for are any indications of this 1226 line starting to curve over a little bit. If you start to see this curve over, your average line, that shorter term line, will continue to go up and you might get a crossover. Now, looking at some of the crossovers we've had, it can help to give some indication of broader term price weakness on a weekly basis. But this is what I wanted to highlight because if it does turn, look over here with me, you can see how it curves back. This is a great example. This was in 2023. Why am I choosing 2023? Look at the months I'm looking at, folks. August, right there. Sometimes you get a sideways and sometimes you get a pullback here. Notice the MACD. Can we get broader price confirmation? There is the pullback, and notice that average line. It just held straight right through there. This can be very, very helpful to look at. So I want to talk about the MACD. It can be used by traders on a shorter term basis. Swing trades, 3 to 14 days is what I talked about in those links that I'd sent you guys there. But, you know, broadly speaking, it can be helpful too in the market's big picture as well. So wanted to highlight that. We are coming into that month. And sometimes you will get that seasonal pullback, but it would be, you start to see this kind of pullback on a week-to-week basis. So we shall see on that. It could foretell something into the next few months if there's that pullback there, folks. If you found value out of our presentation today, be sure and smash that like button. It lets me know you found it useful, as well as informative. Please, hit that subscribe button. Love to have you subscribe if you're not already. We're getting close to reaching a milestone on that. If you're not already, though, be a great place to tap into some of the classes we teach. Cam teaches a great class. We've got a number of coaches that teach other great classes. Love to have you involved with the Trader Talk channel. All right. Well, on that note, everybody, I don't think we saw a survey in the chat. Correct me if I'm wrong, Cam, but I think we might be, coast might be clear. So I think we might be all set and ready to go. All right. Well, we finished off. Hopefully you got some ideas, some background in terms of what we've been seeing with markets and sectors recently, and some indications that could be helpful to look at going forward. With that, everybody, have a fantastic rest of the day. See you next time.